Welcome back to Courtside Financial. My name's Obi, and if you're new to the channel, make sure you hit that subscribe button because NIO is very well documented on this channel, and also make sure you hit that like button because it really does go a long way in helping out the channel. So today we're going to be talking about my expectations for NIO's Q2 earnings. NIO has their Q2 earnings next week on August 11th, which is Tuesday. Obviously, I think this is going to be a good earnings call because over the last 3 months or so, NIO has treated us very well as shareholders. You know, it's pretty much been good news after good news, but what am I looking for specifically? Obviously, the company is not profitable at this time. A year ago, they lost 45 cents per share. This year, they're expected to lose 34 cents per share, according to Zacks. I definitely want to see them beat on that earnings estimate. And then revenue. Zacks expects them to do $486 million in revenue. Last year they did $220 million in revenue. So I think that they're going to come close or meet the expectations on both of these. And I think this because they've just had great sales in Q2. With the exception of July, every month was an increasing month. June was a monster month for the company. They delivered 3,740 vehicles, which was the most the company's ever delivered in 1 month in the company's entire history. So every month was pretty much increasing with the exception of July. Even though July didn't top that, it was still the second best month that the company had in terms of deliveries. And you got to take into account the fact that they were supply constrained. They had to shut down the factory for 5 days out of the month. And this was because of geographical issues. You know, there was flooding going on in the area. So the sales are great. Now that we can all agree on that, I'm interested in the margins. How do the sales translate to revenue? NIO needs to continue to increase monthly vehicle deliveries or sales in order to eventually begin to benefit from economies of scale. We definitely can't forget that NIO has negative vehicle margins right now, but the increasing deliveries should help out with revenue. Also, they're reinvesting into the business right now, putting a lot of money into R&D, so that should affect revenue. This isn't a bad thing, it's actually a good thing, but just for the sake of earnings, it's probably going to affect the revenue. Well, it is going to affect the revenue. In the Q1 earnings call, CEO William Lee said that we could expect to see negative 5% vehicle margin by the end of Q2, 2020. And obviously in Q1 2020, it was negative 7.4%. So that would be really good. We want to see that the loss is narrowing. We want to see that the margins are getting better on vehicles. So that is one thing that I'm really going to be looking for. And obviously I'm going to be looking at gross margin as well, the overall business. So I believe in Q1 it was somewhere around negative 12.4%. In Q2 we just want to see that loss narrowing even more. So it's okay that NIO is losing money right now because the battle that they're fighting right now is a battle of market share and scalability. Eventually, when these things turn around, those losses should turn into profits. But aside from that, I hope that they provide more information about the Hycon joint venture with GAC. They probably won't. This is just something that I personally want to know more about. But if they do, that would be great. I want to know what you guys are looking for in this earnings call. And I want to know what's your sentiment? What do you think it's going to be? You think it's going to be good earnings or do you think it's going to be bad earnings? Anyways, that's what I think. Thank you guys for watching. Make sure you hit the like button, make sure you hit the subscribe button, and leave me a comment down below.